I'm going to start with the number, not the explanation, not the theory, just the number. Because numbers do not lie and they do not comfort. Silver is trading at levels that historically only appear when the financial system is already under strain. And yet, there is no panic, no headlines, no urgency, just silence. And that silence, more than any crash, is the first warning. Markets do not collapse with noise. They collapse with quiet confidence, when prices move without commentary, when volatility compresses instead of explodes, when nobody feels rushed, when nothing feels urgent. That is not stability. That is pressure building where attention no longer exists. That is the calm before structural repricing. Over time, I have learned to fear quiet markets more than loud ones. Loud markets give you time. Loud markets give you signals. Quiet markets move while nobody is watching. Silver has entered the phase now, a phase where nothing looks dramatic, but where everything becomes irreversible once it begins. Every hyper-bull market follows the same structure. The asset changes, the decade changes, the story changes, the excuse changes, but human behavior does not. There are always four phases: stealth, awareness, mania, blow-off. Miss the first two and the last two arrive without mercy, without warning, and without forgiveness. The stealth phase is where belief is broken. Prices remain depressed, volume disappears, the news stays negative. Analysts dismiss the asset as irrelevant. Silver lived here for years, too volatile. No yield, no future, no narrative. That is exactly when accumulation begins, quietly, patiently, without permission. Smart money never arrives with excitement. It never arrives with headlines. It arrives with patience. During the stealth phase, buying is boring. Breakouts fail, rallies fade. Owning silver feels like a mistake. That discomfort is intentional. It forces weak conviction out of the system before the real move begins. Most people do not lose money because they are wrong. They lose money because they become exhausted. Silver exhausted belief. It punished patience. It made long-term holders question their own logic. That psychological pressure is not accidental. It is the entry gate for generational moves. Then something subtle begins to change. Price stops collapsing. Selling pressure weakens. Higher lows appear, not dramatically, not violently, but persistently. Volume does not surge. It whispers. This is not euphoria. This is not optimism. This is confusion, and confusion always marks the transition. This is the awareness phase. The market is no longer dead, but it is not trusted. Silver is here now. Media mentions increase cautiously. Analysts add disclaimers. Short-term rally, industrial demand cycle, temporary supply stress. Nobody calls it structural yet. Nobody dares to commit. That hesitation is critical because real bull markets do not start when everyone agrees. They start when nobody can fully explain why price refuses to fall anymore. Awareness is not belief. Awareness is discomfort. It is watching something rise while hoping it fails. On MCX, stress does not announce itself through headlines. It shows up in structure. Open interest rising alongside price, delivery ratios staying elevated, physical premiums refusing to normalize. These are not retail behaviors. These are not emotional reactions. These are institutional pressure signals. Under normal conditions, futures lead spot, paper leads, physical. Under stress, spot begins to resist futures. Physical demand strains paper settlement. Price discovery weakens. Silver does not explode first. It bends, slowly, quietly. That bending is happening now. This is why awareness phases are dangerous to ignore. They feel temporary. They feel reversible. Every pullback feels like confirmation that the move was fake, that it is over, and yet the floor keeps rising. Higher, slowly, relentlessly. History has shown this pattern repeatedly. In the late 1970s, silver behaved this way before its vertical run. In 2010, the same disbelief dominated commentary. Different decade, same psychology, same outcome. Markets change. Humans do not. Then comes the moment nobody expects. Not a crash, not a spike. A line gets crossed, not on a chart. In affordability, silver crosses buying power. The average person can no longer buy meaningful quantities without leverage. Access disappears before headlines appear. This is the beginning of the mania phase. Debt enters the narrative. Margin becomes normalized. People stop asking whether silver is undervalued. They start asking how to get exposure, how to participate, how not to miss it. Language always changes before price accelerates. Hedge becomes opportunity. Opportunity becomes necessity. Necessity becomes fear of missing out. At this stage, valuation no longer matters. Fundamentals fade. Participation becomes the only metric that matters. This is where new metrics appear. Price is justified using comparisons, projections, and stories, not fundamentals, not cash flows, not logic. This is not analysis. This is collective rationalization. It always looks intelligent from the inside. The greater fool phase follows naturally. People do not buy silver because they want silver. They buy because they believe someone else will pay more tomorrow. That belief fuels vertical price behavior until belief itself becomes fragile. The blow-off phase never lasts long. It is violent, emotional, unstable. Volatility expands. Regulators intervene. Liquidity vanishes precisely when everyone wants liquidity. The exit closes when the crowd reaches the door. Every cycle claims uniqueness, technology, geopolitics, monetary policy. The reason changes, the justification evolves, but the structure does not. Human behavior remains the constant variable across centuries of financial history. That is why Templeton's words still echo. Bull markets are born on pessimism, they grow on skepticism, they mature on optimism, and they die on euphoria. Not theory, observation. Silver has already left pessimism. It is firmly inside skepticism. That tells you exactly where we are. Early, uncomfortable, dismissed. By the time silver feels safe, it will already be dangerous. Markets do not send alerts before they reprice reality. They whisper first. Silver is whispering now, through structure, through silence, through refusal to fall, through pressure that does not release. The question is not whether the cycle will continue. Cycles always do. The question is whether you recognize the phase before it becomes obvious to everyone else, before belief replaces logic.
Because once the world wakes up, the price will no longer wait.